So the global treasury dump is getting worse. Since the start of the year, China has been offloading their US treasuries and they have just kicked things into high gear. Now in September, we had China dumping almost $40 billion worth of US bonds, bringing their total down to 933 billion. And this is a turning point, guys. China's treasury holdings are now at a 13-year low, and it shows us how bad this currency crisis is getting. And more importantly, how fiercely they are trying to get away from US dollar assets. We have China's treasury holdings now under $1 trillion for 6 months in a row, and we are now near the May 2010 levels when they just had $840 billion worth of US bonds. So China, like the rest of the world, has been on a serious campaign to defend their currency from a devaluation. We have Chinese state banks borrowing dollars in the swaps market to sell in the spot market and buying back the Chinese yuan. Their forex reserves are also starting to bleed out, hitting a 4-year low of only $3 trillion. And this is a consequence of the Fed rate hikes and how dependent countries are on the dollar for global trade, to the point that their own local currencies are now suffering. But a disturbing development is how China and many other countries are willing to dump their treasuries and take a loss. Remember, as yields go up because of rate hikes, bond prices go down, and when you sell, you're most likely taking a loss. And countries, they are becoming fine with that because they need their dollars in cash. We can see Japan dumping almost 80 billion worth of treasuries in September, double the amount of China, because they desperately need dollars to fund their currency intervention. Now, in fact, according to Japan's finance ministry report, their treasury holdings in October have fallen again by 44 billion down to 941 billion. And that drawdown is close to how much Japan spent on their October currency intervention. Now, this is key because it shows us that they are going to draw down their treasury holdings first instead of depleting their US dollar cash. So if countries continue to dump dollars together, this could set up a deadly doom spiral that is bearish for the US bonds and cause yields to spike uncontrollably. And if there's any country that has the incentive and the will to go all the way to dump more of their US treasuries, it will be China. This currency crisis is starting to backfire on the United States. Now, we have to see things from China's perspective and understand the amount of risk they are facing from the United States, and all this goes beyond just a currency intervention. The problem with China's economy now is that they have to keep interest rates low even when we are seeing global rate hikes happening. Their current benchmark rate is at 3.65% and they can't raise it because of their property crisis. China's property prices, they have been crashing since the third quarter of 2021, and this crash is still happening even when interest rates are low. We are seeing property prices in over 100 Chinese cities dropping, and this isn't going to end anytime soon. They can't raise rates because if they do, it will crash their property market. It has to be a controlled implosion to let the air deflate out of the bubble. And that means China only has one tool left to combat their currency crisis, which is selling off US dollars and buying back the Chinese yuan. They are in the same boat as Japan, and that's why we are seeing them lead the global treasury dump. But that is just the tip of the iceberg. We need to understand that Russia is not the only recipient of American sanctions. China has been under one of the most heavy-handed technology sanctions from the US as well. Basically, China's microchip ambitions are being crippled in the short term. They can't buy high-tech semiconductors and chip-making equipment, and the US is even pulling out their citizens from Chinese microchip companies. So China has lost their foreign talent, and their chip-making ambitions are going to be delayed. And it's not a stretch to imagine that this could extend to financial sanctions that could freeze China's dollar assets. And that's a big reason why China is pulling out their US treasuries and just sitting in dollars. They need the cash to buy back the yuan, and taking the loss from bond values is better than losing everything, right? A 5 or 10% loss sounds better than a 100% loss. They're probably considering it to be a financial cost of doing business with the United States. But here's the interesting thing. We might actually know where China could be parking the proceeds from their US Treasury sales. Now, just a few weeks ago, it was announced that global central banks have been buying incredible amounts of gold in Q3. We are talking about almost 400 tons of gold being snapped up in Q3 this year. And the big question is, who are these mystery buyers of the gold? Around 300 tons of gold was bought by a bunch of whales or maybe even a single whale. And at today's prices of around 17.50 an ounce, we are talking about well over $15 billion worth of gold being stockpiled away in secret. Recall that China sold over $38 billion worth of treasuries in Q3. It doesn't take a genius to suspect that the most obvious buyer could be China. We already know that the country is a black hole for gold because it is the most reliable asset and store of value that has zero counterparty risk. So it isn't impossible for China to take some of the money off their treasury sales to purchase gold in secret. They need to secure their wealth away from the West. It could be in preparation for an eventual gold-backed currency as well, because we need to realize that the US and China relations aren't exactly strong. Sure, President Xi, he met Biden during the G20 summit in Indonesia and they were shaking hands like old friends. But behind the scenes, we have China telling the United States to mind their own business. They are sick of the democracy versus autocracy argument. He specifically said, just as the US has American style democracy, China has Chinese style democracy. Both fit their respective national conditions. And this is the underlying message China is sending to President Biden. Do not meddle in our affairs. And when he said that, he was likely pointing to the Taiwan issue as well. President Xi, he emphasized that he hoped Biden has no intention to use Taiwan as a tool to contain China or seek advantages against it. And this is not an unfounded worry that China has. There's been reports that the US is considering options for sanctions against China to deter them from taking action on Taiwan, a form of preemptive sanctions, if you will. Now, this is why it is not surprising that China is cashing out of their US treasuries and likely putting it into physical gold, a hard asset that they can control and is sanction proof. So I believe that China's role in dumping US treasuries has a dual purpose. The first is to protect against any further devaluation of the Chinese yuan, and the second is to secure their wealth in case the unthinkable happens and the United States slaps financial sanctions on Beijing. And right now, we are seeing the 10-year yield coming down as money is flowing back into treasuries because of the rosy inflation numbers, and investors, they are hoping that the Federal Reserve will stop the rate hikes. And that means bond prices are starting to recover, and this actually gives countries like China and Japan an extra incentive to dump even more bonds. They get to exit at a higher price because we need to understand what is in store for interest rates going forward. Rates are going to go up and the pressure on global currencies is still going to be there. Powell has said time and time again that tightening isn't over yet. And now we have the Fed Governor Waller also beating the war drums, hinting that another 50-point hike could be coming in December. Inflation is still crazy high in the United States, and the Fed has no choice but to keep demand destruction going. Remember, China and Japan will still be under immense pressure to keep selling off their dollars to defend their currencies, and it makes sense for them to get rid of treasuries now while prices have recovered. We just need to look at the example of Japan. They are slowly depleting their US treasury holdings, but they are not touching their foreign deposits of dollar cash because they know yields will still go up as the Fed hikes and it's time to cash out. The dollar is currently weakening and we are seeing major currencies bounce back quite a bit over the last week, but the currency fight still isn't over yet. The euro, the yen, the yuan, they are all still down 10% or more compared to the dollar. Winter is coming for Europe, and if things get bad enough, we are going to see the Eurozone turn its back on their American friends and start selling off their US treasuries as well. We have traditional US allies all dumping their US debt as well. Switzerland, Taiwan, France, Canada, Norway, and Germany. Major economies are running away from treasuries, and this is something we need to take note of. This is a serious global sell-off. Even the US Treasury seems to have given up and is accepting the fact that the world is scrambling for dollars and selling off their bonds. They know that the surging dollar is driven mainly by the Fed tightening, and it's quite silly to label the whole world as currency manipulators, right? So this Treasury dump probably isn't over yet. Now, the big problem with the global treasury sell-off is how it could implode the biggest bond market in the world, and that could make the UK gilt crisis look like child's play. And when countries they start dumping bonds, this will add pressure for yields to go up. We don't know how much leverage is in the system and how much bond derivatives they are floating around global pension funds and the big banks. It is one big gigantic black box. We don't know what's inside. And this is the big problem with today's financial system, right? Everything's intertwined together, and every time bond values drop, it causes a magnified effect on the financial system because the bond market truly controls everything, including the economy as well. If bond prices really collapse, we will see the cost of borrowing go through the roof for companies and domestic Americans back home as well. And this means spending is going to dry up and more layoffs are going to happen, essentially guaranteeing a recession. Because the Fed isn't going to stop, guys. All the Fed governors and presidents, as all his merry men, they are saying that higher interest rates are coming. We have Delhi saying that rates are going up by at least 1% more, and Ballard telling us that even the most optimistic policy assumptions will include rate hikes. He wants rates to rise above 5% at the very least to fight inflation. What we have now isn't nearly enough. And if there's ever a good excuse for the Federal Reserve to stop hiking rates and do a pivot, this will be it, guys, to save the bond market from crashing. So what we are seeing now is a complex web of investors running to US bonds as a safe haven trade versus countries selling off treasuries for cash for currency interventions. It's an epic tug of war, and the risk is going to get bigger as the Federal Reserve keeps hiking until something breaks in the market. And it could be hedge funds and banks taking extreme losses on their leverage positions. It could be the retail investor giving up and losing hope on an early pivot coming. But more likely, it might be central banks dumping their treasury holdings in order to defend their currencies because there are very few choices left, guys. And I'm quite confident that while the Fed won't save the stock market, they will likely step in to rescue the bond market. And if that happens, we are going to have inflation on an epic scale. We're going to see money printing on a scale that will shock the world. But whether the bond market collapses or not, the long-term picture is going to be quite bearish for the US. We are starting to see de-dollarization play out in the treasury markets, guys, and not just the reserve holdings in central banks. Countries are actually getting out of the dollar assets and they are willing to take a punch in the face. And in total, the foreign holdings of US treasuries has dropped to their lowest level since May 2021. We are talking about a 3% drop in just 1 month from 7.5 trillion down to under 7.3 trillion dollars. There are liquidity issues already brewing up in the treasury markets, and this is a perfect nightmare scenario that could trigger a big liquidation event. And if the liquidation disaster starts with foreign bond holders like China, it could trigger a domino effect that will cascade all the way down as yields keep spiking. Now let's remember that the US national debt has been snowballing and is on the brink of hitting the debt ceiling. And there's a very good chance there's going to be another round of debates between the Democrats and the Republicans on raising the debt ceiling once again. Now, I don't think the US will default on their debt. I believe as long as they hold the reserve currency, they will just raise the debt ceiling and kick the can down the road. But it will make the eventual collapse even harder because you cannot run from reality forever. And we have to pay attention to the foreign holders of US debt because the more they dump their bonds, the higher chance something will break in the economy. So let me know what you think in the comments below. Will this bond sell-off get even worse? Is China going to continue selling off their treasuries? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these insane times.